Welcome to CFO 4.0, the future of finance. The CFO role is changing rapidly, moving from cost controller to strategic visionary. And with every change comes opportunity. We are here to help you take advantage of this transition, to win at work, drive your career forwards, and lead with confidence. Join Hannah Munro, Managing Director of ITAS, a financial transformation consultancy, as she interviews key experts to give you real-world advice and guidance on how to transform your processes, people, and data. Welcome to CFO 4.0, the future of finance.
So hello everybody and welcome to this episode of CFO 4.0. With me today is Charlotte Crowley, who is the CFO at Altano. So welcome, Charlotte. Lovely to have you on the show.
It's great to be here, Hannah.
So tell us a little bit about your journey. How did you end up at CFO at Altano, and how did you end up in a CFO role in the first place? What's your story?
So I graduated from university just after the 2008 financial crash. So I had a few options that I was exploring. I studied economics and politics, and a few of my friends had gone into banking, a few had gone into kind of politics roles, lobbying, various extra studying. And I did a master's after graduating with the economics and politics in marketing, realised that I quite liked, I suppose, going back to the numbers and having things in their boxes is how I call it for finance, and took on a part-time role working just bookkeeping, finishing off my master's. And then came to London and found an advertising agency that was willing to sponsor me to do my ACCA, and just carried on from there, really. So being in advertising, there are a lot of different sorts of people, not normal numbers people, as you'd call them. I worked there for a couple of years, and then they went through their own sort of acquisition process, and Phoenix Equity Partners bought them and a couple of others and sort of put them all together. And then I went to a very small boutique PR firm and was the number 2 hire in finance. And I quite enjoyed bringing everything in-house. So my boss at the time was doing everything. So had a few bits outsourced, and then I was the piece of the puzzle to bring the rest of it in-house. They had quite a bit of growth whilst I was there, and had also set up operations in Singapore, which had given me quite a good project to get my teeth into when she went on maternity leave. I was there for about 7 or 8 years, and again, they were then acquired. Problem when you start doing well, people start looking and want to purchase. So I went to Vivid Economics as their first financial controller hire, and slightly less terrain than my previous places. And within 3 months of being there, they were sold to McKinsey. And sort of after that kind of process, began the integration into the different departments. When you're part of a smaller organisation, the finance hand tends to pick up a little bit of insurances, operations, payroll, all the bits where numbers might touch. And so that kind of fell on my plate in terms of integrating into McKinsey. And then once that had kind of been completed, I took on a project role there. I was due on maternity leave shortly after, and kind of realised that I quite liked doing all the different bits and pieces, not just one siloed role. And then went on to finance director at Zenteo. And my first experience, or at least proper experience of private equity. Each time I've gone somewhere, I've learned an awful lot about the industry, the people. But one thing that I think stayed with me is that the bookkeeping and the numbers part, regardless of industry and regardless of people, are actually quite similar. And the biggest learning and the biggest change is the people and the environment. I had a family, so I've got 3 small children, so it was quite a lot sort of working in London, doing the commute. And so I am now with Altano, who are globally based, and it allows me to have a little bit more flexibility with my hours. Don't get me wrong, there's still a lot to do, but when you can work that around different time zones, it's a lot easier to manage with my home setup. And I think what appealed to me is that they entered the UK market last year. And so there's quite a lot to get your teeth into, not just finance. And I really love how finance touches everything. So even if you're not experienced in a certain area of the business, you know that finance is going to have to partner with it at some point.
And so it sounds like you've been through a lot of acquisitions and investment rounds when we're thinking back through the piece. I guess, what was your experience like shifting from like McKinsey into private equity? How did that must have been quite a dramatic change, or did it feel similar?
I think I wasn't with McKinsey very long, and I think because of when I joined Vivid, I almost had two roles because there was you've joined Vivid to sort of professionalize the finance function. They were a very, very kind of scrappy startup that had had such growth in such a short period of time. Their founders had obviously done a very good job of developing the company and the team. And so you were on one hand managing kind of this accelerated growth, the team where they didn't have formal processes. You know, we had a couple of the entity accounts still on Excel, no accounting software. And then at the same time, you were then seeing what the rigor and, you know, control environment was of a much, much larger organization. And I suppose during that period, I was balancing the two the whole time because, you know, they needed to eventually integrate in, but equally, they were successful because they were this startup that was agile. And so it was a careful balance. And I suppose going from that into private equity allowed you, or enabled me to move quickly, which is what you needed to do there.
So tell us a little bit about how you felt working in private equity. Was it different? Because there's a lot of people say it is. Some people say it's just normal, but at a faster pace. What was your view?
There's definitely a faster pace. I think in particular, my experience there, the private equity house had kind of really only just formed. And so they were like their own startup, if you will. So I think they were still sort of finding their feet a little bit on kind of how to run a business. And so some of the, I suppose, private equity mannerisms that you would ordinarily find, I suppose they were there, but everyone was sort of new together, which had benefits and challenges. So Altano also private equity owned, 70%. I think the one or the two similarities between them is that they're both part owned by the people in the business. And because I don't know any different, I don't know what's normal in terms of, is this how it would always feel, or is it because it's, you know, part owned by the employees? And I think both sides, they were both very invested in the industries that they'd kind of invested in. It wasn't just, what do I do for this particular business to get the return? It's, we've invested in this business, yes, we're going to get the return, but how do I grow in this industry? So I think there was a slightly longer term objective. And again, that's sort of been my experience on both sides.
Yeah, and that's quite unusual, isn't it, for private equity? Because normally they have a 3 to 5 life cycle they're looking for.
Exactly.
Yeah.
So I don't think I had the usual set of experiences, and now this is two and counting. It's what I know.
And you mentioned, obviously, and I thought that was an interesting comment you said earlier about finding the balance between when you're taking a scrappy startup, and I love that term. I can see an image of that, to, I guess, professionalizing it without losing the core of what's made it successful. So what does that look like from a finance perspective? How do you balance, I guess, mitigating risk with being, reactive and agile enough to cope with the requirements of the business?
I think kind of go forward principles are quite important, that you can sort of flex up and down. So it's sort of what processes you create, having the flexibility within that. But for me, it was always kind of what's a need to have and what's a want to have. And the need to have, everyone needs to be on board with, because it's compliance, it's legislation. You sort of can't really change that regardless of who you're dealing with and what people like and dislike. And then the want to have, how is it that you can build that education and engagement piece? Because usually it's sort of people on the finance side of the fence understanding why that's a problem operationally. And then operationally, it's understanding, okay, what's going to be the consequence of this? Something as simple as expenses. Why can't we spend £100 on that? Well, you're going to pay tax on that. So this is going to be a bigger cost to your business, and therefore your return's going to be lower. Oh, okay, so if we set it at this, yes. And then on the other side, we might have clients where we will just have to spend because we're in a sales process. We're going to, perception is important. Okay, let's include discretion for so many directors to enable this to go through. And I think it's finding the common ground.
When you look back on your time, what's been your biggest challenge when you've been in those leadership roles?
It's definitely the people. I think you're going to have worked with people that have founded their businesses that have been very, very successful, and getting them to open up to kind of a new and changed mindset is quite challenging. And it's really about building that trust and that openness, which sometimes they haven't always had. I think, at least sort of my experience as well, is you've got quite a few superstars, and then trying to get them to kind of be on a team of superstars as opposed to just doing things in their own kind of way, and balancing that a little bit has definitely probably been the most challenging. It's the people management side of things in the room, getting them all on the same page.
Yeah, and I guess a lot of, especially smaller business, will have if they're lucky, 1 or 2 A players versus a team of A players. So how did you manage that? Because that doesn't sound like an easy scenario to deal with.
I'm not sure. I would say that every time it was successful. I think some challenge is good, and actually it's okay sometimes that people don't agree, and they move forward with their own objectives. But it's really just, as I say, about finding that common ground. And so the education piece and the kind of building that relationship where you're listening to them. I think it's sort of not just finance, not just business, right? But generally, when you're going at 100 miles an hour, it's quite hard to stop and actually listen. And I think sort of doing that to everyone and then encouraging that back is probably the hardest bit. But you just need to find one thing that they kind of haven't seen and that they can appreciate, and then slowly you can build up the trust. And it might be 2 or 3 things. And don't underestimate the importance of their whole team. Don't just speak to them, just go all the way through to the EA or whoever they're working with, because they might be equally important. You might not get their ear, but someone else might.
It sounds like there was that's a lesson learned there, in terms of, is there particular, I guess, challenging scenarios that you had and you had to kind of work your way through?
Exactly.
So tell me a little bit. I guess it sounds like there's quite a big element of stakeholder management in the roles that you've picked up. So if you look back, because I think one of the best ways is to learn it through experience and sharing other people's experiences. Could you talk us through maybe a challenging scenario that you had and almost how you use the stakeholders around that person or that situation to try and get to where you wanted to be?
I think integrating a smaller startup where entrepreneurial spirit was vital for the
Yeah.
success into a kind of a larger machine like McKinsey was definitely challenging. And I think particularly where you had different isolated departments at McKinsey where they would be responsible for that one piece, and they themselves probably didn't have quite the understanding of the crossover between tax, risk, commercial, because they had such a big job just doing the risk, or just such a big job doing the pricing or whatever it may be that they were doing. And the types of contracts that we had at Vivid, some of them were kind of with smaller charities even, and trying to manage that individual whose sole objective was to deliver work for that charity. And these are important pieces, right? You can't argue that that's not what the sole objective should be, but you now have to comply with risk. So you have to set up the project or set up the client in a particular way that protects both the firm, the individual, but also the charity in the long run. And getting the buy-in from those individuals to then support that work was quite challenging. And as I said, it goes back to we need to have this. This is the non-negotiables. We'd like to have this. Let's work on a scaling approach so it doesn't feel too uncomfortable. It just gradually goes to the direction that we want it to go to. As I say, I think the listening and understanding, what do they want out of this situation? Well, they want to deliver to the client, and they don't want a load of extra work because they want to put all of that energy into delivering for the client. And so how can you balance that work not going somewhere else, because that's just going to upset someone else in the team, and B, kind of changing that mindset. And I think it's important. That's why you have a plan, right? That's over a period of time, not just today we're going from A, tomorrow we're going to be at B. It's important that there's a journey. And I think it's important that people go on that journey and how you bring them along.
Was there anything, because obviously you'd think that McKinsey, being who they are, would be very good at acquisitions and onboarding. Was there anything that they did particularly well when they onboarded that smaller entity to help them integrate?
They were great, and actually, I've never been at a place that has got so much opportunity for training and development for their colleagues. I think because they went through quite a spate of acquisitions, there was, there's a formalized process, but equally, each acquisition would be different. And I think that's where the challenges lay, because you've done it once, so you know that the headlines are going to be these, but to how important those headlines are going to be different in the different organizations. And I think most people would have their day jobs, and it's good having a kind of a transformation lead and someone managing the transformation, but you've also got two people on either side that does the day job. And actually, the most important thing is that they're connecting to make sure that going from A to B, the day job isn't interrupted. And I don't think, regardless of having project managers all over the place, unless they're on the same page, which you can't control, you can support, you can get set up, you can do everything in your power to do, then it's not going to work and you're going to have friction. So I think actually it would be specific to the acquisitions and specific to the people in those roles. And as I say, for myself, most of the people weren't doing those roles really. Everyone was sort of picking up when they had a spare 5 minutes because they weren't big enough to have those roles. And so the importance is actually having someone oversee that, so that you haven't got your HR person that's looking after IT, HR, or finance being completely bombarded, because in a much larger organization, you will have someone in charge of IT, you will have someone in charge of HR and finance, and they're able to kind of cut off and isolate part of their day to support with that. Whereas if you're getting that on the same day at the same time from everyone, someone would explode.
Yeah, so I guess whether you're being acquired or doing the acquiring, being aware, I guess, of the multiple roles of the individuals
Exactly.
on that side, and thinking through, I guess, how you approach the integration in a way that may be staggering some of the integration components based on the roles that people have.
Yeah, and as I say, they have a template. Of course, they have a template. They know what they're doing, right? But it doesn't mean that when you get to there that the template, then you're speaking to the same person for about 8 pieces and you have to pivot. And yeah.
And, looking back, having been acquired a few times, it sounds like, is there anything that you would do as a finance leader before you actually went into that process to make it a better transition? Because when the research shows that, the actual acquisitions, it's the in some ways the easy bit is doing the commercials, the harder bit is the actual integration of that organization and seeing the value. So, when you look back on your past experience, if you had to give some advice to people about to be acquired to make that process as smooth as possible, what would you do differently?
So I think it's even before the commercial piece, actually. I think you can't underestimate the pressure of due diligence to a company that hasn't operated in that way before. And often, whenever you go into an organization, there's likely a bit of tidying up around the edges to be done wherever you are, because there's been a change of personnel, there's been growth, there's been anything. You could walk in and you'd be able to tidy up around the edges. So I think it's not underestimating that due diligence process. And I think giving kind of the understanding to those going through it that, it's not going to be a great time, but don't take it personally. Just yes, no answers. What can and can you not achieve? Communicate what is going to be very difficult and see if there's a way around it. I think when you've got the commercial piece on the line, it's quite difficult, because those selling want to achieve what they're being asked, so they get their price. But actually, if you're missing something and it could be replaced with something else and have the same result, and it causes less stress to everyone involved, maybe those questions should be asked. And I think encouraging that confidence in that process would make things a little bit easier, at least from my side on experience. Everyone's a bit shell-shocked after the due diligence happened and the price has been agreed and finally the documents are signed. And there needs to be a bit of recovery time, I think, before you start integrating, and different integration approaches as well. All of the organizations I've been in have integrated completely differently and at different times. And I don't think there's a rule book for what you should or shouldn't do. I think it's just being mindful and having an understanding of those particular businesses. In the UK at the moment, we're planning on and hoping for more acquisitions. And for me, it's important that we don't have a rule book, we have a framework. So people have an understanding on what's coming, but if it doesn't fit them for that time, then we'll do it later when it fits, or tweak it so that it works for them. Because at least for our organization, the medical side isn't for us to touch. The idea is that we can make those kind of synergies through collaboration and having a larger group for procurement or finance functions, HR functions. But even that, you don't know where they're touching on the organization. So it's important not to, as I say, have a rule book. It's what needs to be the same and what needs to happen and what's a want. And the want piece is, how do you kind of build trust and have something that you can both find agreement in?
So for those of you that don't know what we do here at ITAS, so we are a financial transformation consultancy that specialises in Sage Technologies, whether that is looking at a new solution, evaluating your current solution, or just helping you to get the most out of your current setup. We can help. But rather than me tell you all the reasons that you should consider working with us as a Sage partner or a transformation consultancy partner, I'm going to let our customers do the talking for us.
ITAS were there from the sort of get-go, helping us, talking through what the process was going to involve, setting expectations, making it clear that how much work we were going to have to put in to make sure that the project was a success at the end. And then talking us through all our different options, looking through our current processes, making us reevaluate what was important, which elements we wanted to move across to the new system, how we wanted to configure our new system, and also kind of making us sit back and really think about what is the success of this project. When we get to the other end, when we finish the implementation and we're in the system, what's success going to look like? And actually, putting that question back to us and really making us sit down and think about what is it that we are looking to gain from this whole process was really useful internally, making us really think about the key objectives and which areas to maybe prioritize over others. It was also really helpful sitting down and thinking about it rather than one big huge project, actually splitting it down into different phases, sort of smaller bite-sized chunks, which made it seem a little bit more achievable within the time. And then thankfully ITAS have been super flexible with us during this process, because it happened to coincide our implementation with our first ever financial audit, which just took up huge amounts of our time that we didn't expect. So we did have to slightly push back some of our go live dates, and thankfully ITAS were accommodating and actually helped us navigate through that process. And like to say that thankfully we're out the other side of our first phase of go live, and loving the move to intact.
And you mentioned that obviously the different organizations that you went through the acquisitions with all had slightly different approaches. Tell us a little bit about approaches, and I guess the pros and cons that you saw to each approach.
Yeah, so one, it was kind of, and I won't go into who because for obvious reasons, but one, they very much kind of integrated where there was a set plan on how the people were kind of viewed in terms of what type of colleague they were, whether they were independent or whether they were part of the company that was acquiring. And then there was kind of a staged approach where it was quite obvious, I suppose, that they would eventually become colleague from company B as opposed to colleague from company A. We had another where there was kind of a period where they were operating completely independently, so operational decision making. And then at a sort of juncture in time, you could look at, is this successful to be operating, or should we start including as part of the wider offering? And there were key folks that were kind of, I call it the carrot and stick, but you were obviously encouraged to stay, otherwise there'd have been a penalty. And then another where they had sort of more carrot actually, but it ran through the organization. So everyone was rewarded, a transaction bonus or something like that. And then there's another where you have kind of reward for commitment and success of the independent. And I think, again, it's one of those that you can't pick one that would be right for every organization. But I think it's important to get those key personnel locked in. And so certainly you need carrot and stick, but I wouldn't underestimate that running through more than your kind of more senior layers, because if everything falls at the bottom, it's going to make the top more challenging. And people nowadays will have more than just financial incentive to stay at an organization. So I think it's future proofing that as well. So how you've locked someone in for the couple of years, but how do you make them want to stay beyond that point? And I think that's how you look at the organization as a whole, but also what can you offer down the line that isn't financial actually, because that's more likely going to get that longer term buy-in.
Yeah, and I think I've seen a lot of financial incentives with acquisitions and buyouts. And actually, I think people forget that part of the culture shift is appreciating the new culture that you're coming into and making sure there's some wins on that side as much as there is a financial, because financial goes so far to driving behavior, but it isn't, especially I think things, especially since COVID, have changed quite a bit. That there's a there's a different ask around, I wouldn't say not just work-life balance, but other things, like you mentioned, the education and the development side, and all those kind of things can really play a part in people's willingness to get involved in something.
I think as well, and not just for COVID, but there's been a real shift in people's mindset about staying in organizations as well.
Yeah.
So, there are less golden handcuffs because actually it's easier to move. And so you can't solely rely on financial gain or loss to kind of keep people in positions.
And do you know what's interesting? So I've been implementing finance software for 15 years. And when I first came in, people had been in that specific role that they were in or with that company for like 7 years plus. You go in and they knew everything about that organization. Now, the amount of turnover what you see in finance specifically, because I think finance was always quite a stable role. You get people move, but it was normally for good reasons. Whereas now there seems to be a lot more shift and movement in what and how people, and I guess, like you say, the freedom for people to move, but also the attitude, I think, to people. They're less willing to put up with bad processes, intense pressure. They want, different things potentially from their organization.
Yeah, absolutely. And I think even with finance, every industry I've gone into, there seems to be a talent shortage of them being able to recruit. So, and I feel like it's shifted somewhat, but it was very much over the last sort of 5 to 10 years, employees market. So
Yes, absolutely. And even when there is, I would say, talent out there, I think people are more willing to take risk to find that perfect role, the one that gives them what they want in life at
Mhm.
that time as well. So
Yeah, absolutely.
So we talked a lot about obviously being on the acquisition side, and it sounds like you guys are going on that journey from the opposite angle, which will be really exciting and interesting. So, when now you're thinking about that, having been so much on the acquired side, how is
Mhm.
that changing, I guess, how you think about going and acquiring others?
It's very true, and we have done one acquisition since I've been part of Altano, and it is rather odd being on the other side of the table. I do think it helps a little bit though, because I've been there. I've seen what pressure they're going through, and that's why I made the comment about the due diligence.
Yeah.
I think you can't underestimate the kind of pressure that people feel, and them just needing kind of a thank you once it's it's been done, but also that kind of relief moment.
Mm.
And I think certainly for myself and the team that are responsible for kind of integrating the guys in, you know, we've both been through it for different reasons, and I think we're a lot more mindful on how to communicate what's coming. Not that it's going to change, but like, okay, well, let's do like a page because you're not going to digest this yet. Like, we'll just do a summary, then we're going to meet up again and we'll discuss more. And I think it's that level of appreciation from an integration side that's helpful. And then I think for myself in the finance role, it's understanding like what are the real pain points. You'll always find something in due diligence. They're paid to to
Need
find
to
all the
find
things that they should. Exactly. And I think it's how you respond to those that's quite important to build that longer term relationship. As I say, you could go into any organization and you'll find something to tidy up. And I think it's important that you build that relationship from a trust, not, well, you've had X, Y, and Z that weren't done correctly. It's, we found through the due diligence that there might need to be a couple of updates. Can we look at how we best do that? And I keep going back to the what needs to, what do we want to, because I think the needs to are the bits that obviously you have to solve first. And then the wants to is a conversation as opposed to it being kind of brought across. And then I think as well for even that pricing, which I don't get involved. We have a mergers and acquisition side. Mine is very much to build the relationship for the future of their business as part of our organization. But again, it's kind of understanding what's been a flurry of activity for the last year or so, with the intention of kind of, I suppose, showing how successful the organization could be, to how do we then build that for business plans and future plans with the organization. Everyone's going to bill a little bit more before they're sold, then there's going to be a big push, right? And it's kind of also managing expectations with the team on, is this been a comfortable push? It's great that we can achieve it, but are we going to be able to achieve it with your current staffing model?
And I think that there's an interesting piece in there, is that I think sometimes in that M&A process, especially in due diligence, that you can kind of forget that you want to work with these people on the other side. And
Yes.
and that, like you said, it's so important to retain not just the top level talent, but potentially the wider organization. So being, I guess, proportionate and careful in how you approach those challenging points to ensure that
Mhm.
you have a decent dynamic on the other side to build on, because otherwise you could effectively damage that relationship before you've even got them.
Completely. And I feel quite lucky with the current organization that they see that. And as I say, I think part of it's this longer term investment in the industry, not just this 3 to 5 year buyout.
Yeah, and I guess that's something to be very mindful of with if you're in an organization, either being acquired or doing the acquiring, is to think about, like, I guess the motivation behind
Yeah.
the acquisition is key.
Yes, absolutely.
And you mentioned that due diligence is particularly challenging. I think everybody that I've spoken to has said their first one was always horrendous. But if you had to give some advice to somebody that's about to be acquired, about to go through due diligence, what would you say to them? How would you prepare them?
First of all, I'd say if you're thinking about it in about 3 years' time, start tidying up your books now. Because I think there's something to be said about there's not much additional effort if you do it over a slightly longer period of time.
Yeah.
Start improving the processes, start improving the reporting, maybe get an external accountant to come in and do a little bit of a deep dive, see where there might be some gaps in the paperwork, and get that tidied up ahead of that process. But I think if you didn't have the luxury of having that time, I think it's just being what's the needs, what's the wants. And as I say, because there are needs to have, there is wants to have, and asking the questions, be open with the questions. What's the material impact of not having this piece of information? Because some of them are tick boxes and some of them are likely to impact what the guys are negotiating on. And I think having a little bit more of an understanding on those items would be helpful, because you'd have an order of prioritization instead of a huge list.
And I guess, especially if the other side has done a few acquisitions, asking that before you even go into the deal cycle. Because if they're asking for something that's an essential that perhaps you don't have access to, you need to have a serious conversation with those involved in the commercial side to say,
Exactly.
careful. Awesome. Well, that is some brilliant tips for those thinking of going through acquisitions. And if just to finish this up, if you had to look back over your time in and your experience so far as a finance leader, what is the one learning that you've had that you'd want to pass on to a new CFO?
I suppose the couple of tips would be to look beyond the numbers. Actually, they're probably least important if you've got a good finance team, because the numbers are going to be the same in each of the organizations. Understand the people, because if you understand the people, it'll give you a lot better understanding of the business. And if you've got a better understanding of the business, you're going to be able to do your job a lot easier. And then I think particularly for the acquisitions, it's just communication is key, and be mindful that people are going to come to the table with different levels of understanding of what you're talking about. And it's important to set the tone so that everyone is comfortable having those conversations.
Absolutely. Some fantastic tips there. And Charlotte, if people want to learn more about yourself or the organization, where is the best place to find you?
LinkedIn or the company website. For myself and more of the finance pieces, definitely LinkedIn for Altano and what they're doing, and they're doing great stuff. Their company website.
Brilliant. And for anybody that would like to, that as always, we'll pop those links in the show notes so that you can have a look and see what Charlotte and Altano are doing. So thank you so much, Charlotte, for joining me today. It's been an absolute pleasure having you on the podcast.
Thanks very much for having me.
And to all of our listeners, if you've enjoyed this podcast, please do share it on your social media of choice. Do leave us a review, because that helps us. If there's any questions you feel like I should have interrogated Charlotte on that I missed, then please do reach out. I'm always looking in for inspiration for my next podcast. As always, you can find me on LinkedIn or at the email at the website www.itassolutions.co.uk. Thanks again to Charlotte. Thank you to our listeners, and we'll see you next time on the CFO 4.0 podcast.
Hey Google, what's the best accounting software for my business? Give it a couple of years, and I bet you she'll be able to answer you pretty accurately. But for now, it's still one of the few questions Google can't give you an answer for. But we can. Take our free quiz and find out which Sage product is the right fit for your business. Just head to itassolutions.co.uk.